Good morning. Welcome to Fundamentals with Matt Burk. I am your host, Matt Burk. Today I have a guest, Melanie McDaniel. Melanie, I'm going to let you tell a little bit about yourself, but I see you're founder of a private equity fund manager. You're an investor. You're a Navy veteran. You've done a lot of things, and should be an exciting conversation. Melanie and I have never met before, so this will be exciting and interesting. So welcome to the show, Melanie.
Thank you. Thanks for having me. Do you want me to just go into it?
Of course, my pleasure. Yeah, well, let's see here. Now you're down in Austin, Texas, right?
Yes.
Yeah, well, why don't you give us a little background? I was looking through some of your information here in advance of the show. I see you. We're in the U.S. Navy, and we have some folks in our shop that have given service. So I appreciate that very much. Thank you. But why don't you tell us a little bit about your background, and then maybe start with getting into how did you gravitate to real estate, and we'll start there, and then we'll work our way up.
All right, sounds good. Yeah, I was raised in Utah, Salt Lake kind of Valley area, and had a normal childhood. Go to school, get good grades, right? Do all that stuff. I didn't just go straight to college. I went to the Navy instead because I wanted to travel the world and I didn't want debt. So I thought, oh, it's going to give me, college money. So that all worked out. I love to travel, and my first duty station was in Italy. So big check in the box right there. Right? Yeah, I was very lucky. And then I kind of dabbled I went to college. I got a bachelor's degree in travel administration because that's what I love to do. And I thought, if you love what you're doing, you'll never work a day in your life, right? The whole saying, I knew that as a young person. So I got a degree in travel. And then I was working in Oahu. I was working on the tourist submarine, and it was okay. I got bored of it in about 4 months. I started my master's degree. My master's is in leadership. And then I kind of went back to what was comfortable. I went back to the government. I got a job as a national park ranger. I did that for 9 years. But in 2015, I read Rich Dad, Poor Dad. And everything became clear why I was just really unfulfilled doing that, because I was trading my time for money. I was putting a bulletproof vest on to go to work and carry 4 guns, well, a taser and 3 guns. And not making enough money to justify it, right? So in 2015, I read Rich Dad, Poor Dad. By 2017, I left that career. I moved across the country. I became a real estate agent as the stepping stone. I knew I wanted to do real estate, but I'm the kind of person that takes a bite off and kind of goes very conservatively, gradually up a path. So the first stepping stone was real estate agent. I helped mostly investors. I watched them have their successes, have their failures. I took a few notes from those guys.
So let's say Rich Dad, Poor Dad. What was it about the book that, obviously that's a famous book. Lots of people have been influenced by it and so forth. But what was it about it specifically that sort of made you make the leap? Career change and all that, get into real estate.
So the basic stuff. It's crazy. I was so mad at myself. I was 35 and realized this. It's the trading time for money versus your money making your money. That was just like the aha moment. Oh, my money can go make my money. Why am I clocking in every day and doing this job when the money could go and bring its friends back? That basic concept was new to me.
So then you thought about, okay, I want to get into real estate, and then you say you started as a real estate agent. So why did you choose that as an opening step?
Because I didn't know what else to do. I was spending a lot of time on Bigger Pockets learning, and everything else was too big, too many zeros, it was my mindset. So being an agent, I could wrap my mind around a single family, a flip, a home. That's where I started. And
this is what time frame? What year now? This was 2015. You started that, and so this is 2016.
2015, I read the book. 2017, I became the agent, and 2019 December is where I did the 2.5 years of being an agent. I built a team serving mostly investors. I bought my first 24-unit property in January of 2020 and made my first passive investment December of 2019 in another apartment. So I left that career. I moved to Thailand. It was January 2020. I became a digital nomad. I sold all of my belongings. I decided I could work from a computer anywhere in the world if, instead of being the operator, the asset manager, I was mobile side and finding opportunities. So that was my first step into moving from active to more of a capital role, and co-managing, co-GPing is what I was after. But it was January 2020.
Yeah.
My company launched, Freestyle Capital Group, which is in the bio, launched in February of 2020, and everything changed about that time.
Yeah, of course. Then was COVID. That's a tough time, right? And then, but so tell us about Freestyle Capital Group. So you've been a real estate agent. Sounds like you made, when you say a passive investment. So what did you invested in someone else's syndication?
Yeah. Yep.
And then you
Alabama property.
and then you did your own deal with your own 24 units, and you were the manager of that.
So I had two other partners. The property was in Norfolk, Virginia, which was where I was living before I left Virginia. Yeah. So I wasn't there doing the day-to-day management, but I was definitely, it was a joint venture between three of us.
You still own that property?
No, we exited that one in October last year for a 3x return, which is not normal, but we just got super lucky.
Pretty good.
Yeah, it was really good.
So tell me about Freestyle Capital. Then what exactly does Freestyle Capital do? How do you serve your clients, and kind of what is your structure?
Yeah, so Freestyle Capital Group is just my business. I have Freestyle Fund, which is a customizable fund, and I put deals in there. Investors, it's like a brokerage account for real estate. So investors can pick and create their own portfolio. Do they like a note? Do they like storage? They want apartments. They want to not do build to rent. They want assisted living, whatever. It's all in there. They can create their own little Robin Hood account for real estate. And there's syndications at the deal level, but they're buying slices of an investment. So that's Freestyle Fund, that's current, and I'm launching a new fund, Moonbound Fund. It's not active yet. That's what I'm using the Verivest platform for my fund admin, and that one is just in the build up stage right now. It will be a blind fund of funds investing in other funds, and the underlying funds will be targeted in their certain assets. So I'm looking at a last mile logistics fund. I'm looking at apartment funds, storage funds. Mm-hmm. So Moonbound will be diversified into 4 to 7 underlying funds. But I think we're going to kind of wait a quarter or two to see what plays out in the economy, to see truly, I mean, there's some distressed assets now and there's opportunity now, but we just really want to see what's going to happen with this banking sector and the dollar and all of that stuff before we go place capital. We'll start taking soft commits, but we won't place until we feel really confident we're in a good spot.
Yeah, so those are two very different structures, right? You have a customizable fund where people can pick and choose individual assets, right? And then then the blind pool fund. What has been your experience on the difference between those two? And like, which one do you like better? I know you're just launching the new one, the blind pool, but just we're focused on funds here, so try to get some sense of your experience here as a relatively new manager, checking out different fund types. What is your thoughts on that?
Yeah, I've kind of done everything. I skipped over the SPV. That was my first fund I did, and then Freestyle Fund, and now Moonbound. So I went from SPV single asset fund to customizable asset single assets.
Well, you're moving up the food chain like very rapidly.
Like I told you, I take little bites, right? I learn as I go, and I try not to get ahead of my skis on my knowledge. So I don't know so I'm not far enough into Moonbound to know if I like it better, but I do like the level of investments when I'm, qualifying funds. They're audited, long track record. Sometimes on the individual deals, they have a shorter track record, or they're, it's a different level of, I don't want to say professionalism, because people who syndicate are professionals too, but just auditing, when funds are audited by a third party, I feel more secure with. I like the customizable fund because it's a 50,000 minimum check size, and then Moonbound Fund is going to have a 250,000 minimum check size, which are two different investors, right? So I'm talking completely to different groups of people. So they're not really competing against each other, I don't think. Some people like single assets. Some people want to invest in a fund. They're diversified. One, the asset kind of runs the show. The other one, the jockey runs the show because they trust you. Yeah. And then the other one, they invest because they trust you, but also they can look at the deal themselves and pick. So it really serves different types of investors. So I don't know if I like one more than the other.
Yeah,
I'm hoping Moonbound Fund will be less admin heavy because I have Verivest doing that for me versus me trying to do it myself.
Yeah, they're trying to do it. Yeah, that can be tough for sure. How do you find or attract your investors? So I know for a lot of people raising capital, it's interesting, right? Some people have more of an ability to raise capital than others. Some are better on the real estate side, but where do you find your investors and how do you market to them?
So for the lower investment amount investors, it's social media, being on podcasts, networks of people. Honestly, when I was a real estate agent, a huge portion of my database are the people I served in Virginia because I ran a meetup and I helped a lot of people buy real estate. Those people simply knew me from being the person that ran the meetup. That was huge. And I go to a lot of conferences. I meet people there. I go to back in virtual days, 2021, I met a ton of people just simply because we were forced online, which means you could go to meetups nationwide, right? Now it's kind of going back to the in-person stuff. So the timing of that was pretty nice, but it's just relationships, real relationships with people. I don't have people sliding through Instagram or TikTok or whatever. I don't get too many random people. It's really cast they listen to or a referral or someone I know. For Moonbound, that's big. Those investors, I have partner bases that serve those investors. I have a partner. Well, he's an advisor. He runs a family office, so he's in the family office space. I have another advisor who raises or has her own fund from high net worth individuals. I have a partner who has a huge database. For Moonbound, one thing that's interesting, it's a women-led fund, and we're targeting women, helping women understand financials and investing so they can take control of their own financial future and not, so that's where our heart is. That's who we want to serve. Of course, anybody can invest, but so one partner, she has a huge database that's it's called Empowering a Billion Women. So that's her. And then the other advisor is Women of Wealth. So she has a huge database of women. So we're very women supporting.
That's great. How did you tell us about the partner thing? Because I get that question a lot in our advisory work is like, should I have partners? Should I have people on? Should I hire people to help me raise the capital? How did you, if you don't mind sharing, but how did you find them? How did you structure the relationship with them in a way that has worked for you guys?
Yeah, so I wouldn't have launched Moonbound if I hadn't met these people. So it's not like I had to go find a partner. It was meeting people naturally in a relational way, and then them saying, "Hey, I have this database. Hey, how can we work together?" And then I'm like, "Oh, guess we launch a fund." So, and then finding advisors, lots of connections, referrals. I have a huge database of just people, whether they're investors or sponsors or just really awesome people in the space. I just went out and said, "Hey, I'm looking for an advisor with this skill set." And then you eventually are introduced to people. So the partners come first, right? That's your bread and butter, who you're running it with for the next 10 to 12 years or whatever. The advisors, I was seeking an advisor for the investment specialist, and because fund governance is different than just investing. Someone could be a great investor, but they don't know how to run a fund. Someone could run a fund, but they don't know anything about real estate. So I have both of those. I think they're super important. So honestly, this has all been a lot of just taking the learning as I go and having education sources. Because when you go launch a fund, it's a different animal than a syndication. So
Yes, indeed.
A lot of training.
So did you guys formalize? So did you form a management entity or something that you guys come in together, or how did you formalize your relationship on who's responsible for what portions of the execution, or how did you do that?
So the management entity is Moonbound Partners. That's just one partner and I. Then the advisors are being paid in Class B shares, so they'll get those out the gate. They have a advisory contract, and 25% of the shares will vest in year one, and then they vest 15th year after. And then I'll pay them like $1,000 per quarterly, a 1099 sort of per. So that's how the advisors will be compensated. My partner and I, she's more of a like a partner for the company. So we'll decide what shares, are owned by us in our company. I have a girl that's coming in to do investor relations. She's going to earn Class B shares. Everything else that's not assigned out, I will control, and then I could push Class B shares to people who earn it and bring value, whether they find a great opportunity, whether they make an introduction to somebody that, just whatever value they provide, I will retain all of those Class B shares. And by the time we finalize and settle, I'll be able to push those out to everybody in their earned amounts.
So that's how I'm poured out in 2015. Did you think you'd be here in 2023?
I'm not. In fact, the words came out of my mouth. I would never launch a blind. I have always, like, the mindset thing for sure. I said I would never launch a fund in the SPV, and I'm like, oh, I can do this, but I would never launch a blind fund. And then I did the customizable fund, and it takes a while, because anything to expand your mind, you have to test the limits and gain some kind of confidence. People can go out there and shoot the moon or shoot for the moon, whatever, and do it. I need some sort of path. I need some confidence in myself. I need to understand fully before I jump into something. That's just my personality, but I take action and I take the next step. That's the important part.
So now that you've done this and made the move, then a career to real estate and fund management, how do you feel about it? Like, is it something you're happy with? It something you're glad you did and see it as your rest of your career?
Yeah, launching Moonbound locks me in for at least 10 years, if not 12. Like, that's one thing I tell people if they're going to launch a fund or something. Like, this isn't something you just get to quit. You don't get to walk away. You have a fiduciary duty, and you also need a plan B if you die the fund. Like, this is a serious decision. It's not a job. You're not applying and working for someone. You can't give your 2 weeks notice. I mean, I suppose you could, but someone might be coming after you if you just walk away. So it's a long-term.
Yeah, I've actually seen that before, as managers that have resigned and handed it back over, and investors having to take over the whole thing, and that can be really, really ugly. So it is. You're right. It's a very serious responsibility.
And a long-term responsibility. So your question, I'm happy with it, or I wouldn't be doing it. But I also, with Moonbound, this element of supporting and helping women gives it more meaning to me than just, oh, I'm running a fund and I'm making money. No, I am making a difference in people's lives, and that's the fulfilling part to me. I really believe in real estate. I really believe in commercial real estate, and I believe in funds that are well managed, well selected. It's one piece of a portfolio, right? So I'll handle that piece for my clients.
Yeah, no, that's awesome. That's a great story. So as we get here to the top of the hour, Melanie, I'd like to ask everybody so Rich Dad Poor Dad was obviously a super influential book. What else have you read, or are you reading that you find exciting, or something that really resonates with you?
So it's interesting. There aren't a lot of books out there that teach you how to be a fund manager. In fact, I'm thinking, like, how do people do this? They probably go to a Ivy League school or something, then they get a job with a firm, right? And then eventually launch their own. That's probably the most, but with social media and podcasts and stuff, people like me are going and launching funds, right? So I came across this book. I don't know if you know who, it's blurry, I think.
Yeah, it's also inverted. You can't read it, but what's it called?
I'll read the title. It's Raising Real Money, Real Estate Funds Uncovered, but that's not the important part. It comes in the subtitle, Real Estate Funds Uncovered, a foundation handbook for the aspiring real estate funds manager. I don't think this book is encompassing, but it's definitely a great read. It's written by Salvatore Buscemi, and it's a good start to kind of get the idea, because people doing syndications, they might be like, oh, I raise some money, I do a deal, right? But what you don't know is, what's a fund audit? What is INREV? How do you know you're doing a good job? How do you know you're structuring it right? Like, all that stuff that's new in the fund world starts touching on that. It's a comprehensive book.
That's great. INREV, that's interesting you mentioned that. INREV's got some really good material. It's a European organization, but it's got a lot of relevant stuff on things that people can do to be high quality managers and so forth. It's a very good resource.
kind of set some guidelines, right, for what to shoot for. It doesn't.
Yeah.
Yeah.
It's very
It's
institutional,
like
but for people that are getting started, it gives you a pathway to, like, what you can aspire to, and really what people are looking for. For a shameless plug for me, Melanie, is you should read a book called Capital Attraction. That's what I wrote it, but it's about managing funds, launching funds, etc. So check it out. What else is going on in your world? Anything you're excited about? You're obviously launching the new fund, Moonbound. When does that launch?
Well, I mean, we've started the legal work, but I want to go out to some key investors. I want to get our anchor investor before we go finalize the legal docs. Because if there's a tweak, they don't like a feeling about the structure, then I want to be able to tweak it before we really go out with it. I'll take soft commits anytime now, right? There's nothing to show anybody, but nobody has any money. But if they're like, I like you, I like your story, I like so far what I see, I would be in for X amount if, so I want to start there, but the launch probably end of summer. I've kind of pulled back I was really hurrying through it, really wanting to get it done. But now I'm thinking economics, the banking. I needed to pull back, and now focusing more on how can I serve women and how can that platform be developed so better branded or all of that stuff. So probably in summer, and then raise and place for the next 12 months. I think we could hit a good time in the market, and then also just be a little bit polished before I just go out there with it. Right.
Yeah, no, that's probably good timing in the fall. Hopefully the market's coming back a little bit by then. Interest rates calm down a little bit, and usually people
stabilization is all I want, right? So we could at least underwrite appropriately.
Exactly. How do people get a hold of you, Melanie, if they want to reach out to you? What's the best way to reach you? Email, LinkedIn?
LinkedIn's great. Email right now, Melanie at Freestyle Capital Group is my main email. I'll have an inbound email eventually. I'm on wherever, TikTok and Twitter and all the things, right? Probably LinkedIn or email is fine, or my website. People can find me. I'm Melanie McDaniel. You'll find me. The question, I can put that book in the chat. But yeah, I'm happy to talk to anybody if they're getting started on their journey. That's happy to do that, or however I can help. Love to support women too. Of course, I love the men. Men are in my group. We had a call yesterday, and one of the advisors was like, I'm glad I can be here for diversity.
Yeah,
he's making us diverse.
Well, that's great. We've helped a number of female fund managers over the years, and some really good ones out there. There's just not enough, right? Love to get more, see more, and find more. And so I think it's great that you're doing that. Melanie, thank you so much for being on the show. We appreciate it. It's been a pleasure. Thanks for reaching out. Thanks everybody else for being here. Welcome. Come back next week and episode number 14. And I want to thank everybody for being here. Enjoy your rest of your week, your weekend, and meantime, stay sharp.